Hey traders, in this video, we're going to look at trading BlackBerry earnings. Double B, a very popular meme stock. And we'll just briefly look here at the chart because what in the world is the chart telling us? Absolutely nothing. Because why? It's a meme stock. It's a GameStop. We can't really look over a previous 4 quarters of earnings because it's, I call this the WTF pattern, right? Technical Analysis 101. So what I'm looking for here in BlackBerry, I got him confused, is I was already pricing out the price of the calls and the puts. So the market makers are implying about a $1.20 move higher or lower on earnings. So the stock's at 927. So therefore, if I'm bearish, the stock's probably going to print around $8. That's what the market makers are implying. If I'm bullish, I'm just going to add 20 cents to 925. And that gives me what? We'll just say 1050. We'll make it easy round right there, okay? So the 10.5 calls are going for 27 cents. Ooh, that's kind of expensive because that's what the market makers are already pricing. So let's say the stock prints 1050. These calls may not even move or go up in value. I'm going to need 1050 plus 27 cents, so 1077 to make money on those calls. If I'm looking at the downside play and I want to buy, let's say, the 8 puts, they're only 15 cents. So the calls are actually priced higher than the puts. We call that a call skew. So therefore, what I was pricing out was just either outright bear put spreads or outright bear puts, outright puts, a bearish position. So I can buy these 8.5 puts for about 28 cents here. And let's say the stock goes to $8, these puts are going to double in value. They're going to go to about 50 cents. So just almost a double in value. Let's say BlackBerry goes even lower. Let's say to $7.50. These puts are going to go from 28 cents to $1. So that's a nice 3x gain on my money. The call side, these calls are pretty expensive, right? Let's say BlackBerry goes to the moon, as they say, and shoots over the market maker's move to $11. These 10.5 calls are only going to double in value, and that's, again, for a big move. So if I had to play BlackBerry to the long side, I would look at buying the 9.5, 10.5 bull call spread as a debit, and I can do that for, let's price it out here. So I can buy the 9.5, 10.5 bull call spread for about 26 cent debit. So that's a decent ROI. Let's see if I can do it here at 25 cents. So therefore, I'm risking $25 to make $75 per contract. That's a good ROI. So if you trade it to the long or to the short side, just make sure you're doing it with limited risk because it is earnings, and you're doing it with favorable risk versus reward. Something like this. If I was bullish, I could risk $25 to make $75. Hey, that's cool with me. Or if I'm bearish, I can look at outright buying puts or, maybe spraying out a bear put spread if I wanted to. But since they're cheap options, I'm just going to ride the outright puts. Very, 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 very tiny. Well, I did the position for the video, to be honest with you, because normally I'd be slinging 100 lots, but not on earnings. But like, subscribe, leave a comment on the video. If you're trading this meme stock, best of luck. And at the end of the day, if you really want to trade these meme stocks, get a coin like this, flip it, and then pick a side, because that's about as much advantage as you're going to get with these Wall Street Bet Reddit meme stocks that, have you really had a BlackBerry or seen a BlackBerry in years? I haven't. All right. Catch you on the next video.